What's going on, traders? It's Nate here at the Forex University, and in this video we're going to talk about US 30 and how to trade it. All right, so there's tons of strategies out there. This one works for me. I've been consistent in the markets with it, so feel free to write notes and stay to the end of this video to watch the entire breakdown of this strategy. If you're new to this channel, go ahead and subscribe, smash the like button, and let's get started. What is US 30? US 30 is the Dow 30, also known as the Dow Jones Industrial Average. It consists of 30 large publicly traded US companies, all right? The Dow is considered to be a measure of the market's overall health, as it takes the average of one share price of all the companies in the index, all right? So what kind of trader am I, guys? All right, I am a price action oriented trader, all right? I'm an intraday trader. I'm in and out of the markets within the day, and I look for supply and demand areas to look for high probability trades, all right? So you can see that this is a trend reversal base, and then this is a down base rally, all right? So, you know, the simpler terminology is like break and retest, right? So you look for a break of structure, it retests right here, and then it continues down. Same thing for a bullish opportunity, right? You're gonna see a big break to the upside outside of that zone, a retest within the zone, and then a continuation up, right? So essentially what you guys are looking at is it's almost a smart money concept, because break and retest is very scalable in any type of time frame, all right? So this is the accumulation right here, and this is distribution. So the market moves in waves, just like this. This is actually a wave. And so right here, what you see is consolidation, but the break and retest is when you see a sign of strength, where the market makers are making a big play to the upside or a big play to the downside, all right? So what I'm gonna do is essentially break down the wick off, and then we'll get into break and retest in this strategy, right? So right here, you're gonna see phase A, phase B, phase C, phase D, and phase E. But essentially, you're gonna see three things that will tell you to get in for a big play. So right here, typically you would say this is consolidation, but right here, you're gonna see a selling climax. This right here, ST, means secondary test. So when price comes back down to that support area the second time, it's a secondary test, right? So you're gonna see price ranging and ranging and ranging. And then once price actually blows past that support area, right, that is typically the third tell, right, or the third confirmation of this supply demand area, right, aka consolidation area, getting ready for a big move to the upside. So as soon as it goes back into the zone, or it goes back above the support, then that is a confirmation that this is a market making tell, all right? So it's called the spring, and once it rallies all the way past the resistance area, we would call that a sign of strength, aka a break, right? The retest is when it tests along that previous resistance, making it a new support. So there's two areas of opportunities. The spring, this is typically the biggest move to the upside, and then the second opportunity is a safer bet, because we know that it broke outside of that range for a big push to the upside, all right? A break and retest is just a very simple form of smart money concepts, all right? Because there's accumulation and then there's distribution. That is the market makers, you know, getting in position to make big sells or big calls. So what I want to share with you now is a fun fact about the stock market, all right? So the historical average stock market return is 10% year over year. So if we know that, right, if we're all about probabilities and risk managing our capital, then we should use this to our advantage and take advantage of break and retest, smart money concepts with buys, right? The more that we actually buy into the US 30, the higher probability chances we have of making good calls, right? Or winning that trade. Let's get into TradingView and I'll show you an example, all right? So right here, you're gonna notice that there was a big push to the upside and now we're seeing some sort of consolidation. The cool thing about this is now that you can actually see the market in breaks and retest, right? So the break and retest is essentially this, right? So the market broke, it retested, and then continuation. But now we know that this is a sort of a consolidation area. And then right here, we see, what is this? This is a spring. This right here is a sign of strength. It retested a little bit within that range. And now we should see a push back up to the upside. So I'm gonna wait for price to consolidate a little bit along this range and then continue to go up. Because of probabilities, we know that the Dow Jones or the S&P 500, the stock market in general is bullish, right? So they're getting ready to print a whole bunch of money. This is a bullish market, and so we should see a continuation to the upside. And the biggest marker, right, is this right here. Once price breaks outside of that specific consolidation area, we know that that is a sign of strength. So I'm just waiting for price to get back close to this resistance area for a long position, okay? And then what I would do is go in for a small risk to reward. So, I'd put my risk right here, and then I would go to the next price action area looking left for my take profit areas. All right, if this is too fast, go ahead and rewind this and kind of see what Smart Money Concept's about. I'm going to show you another example just to give you an idea of what accumulation actually means. All right, so again, you're going to see a whole bunch of consolidation right here, okay? And you're going to see this support area right here, okay? So this is a supply demand area, okay? And again, this consolidation isn't just perfectly within this range. You're gonna kind of see it looks kind of like a bull, right? Like it starts off low, it gets a little bit higher, and then boom, you see another bull move, right? So this is the secondary test, okay? This is the spring. So price came all the way down here. This could be another spring as well. But this is where you want to look for those opportunities, right? So after the spring, so this is another spring right here. Let me actually mark this up, right? You're going to notice that price significantly went back up near that resistance area, okay? And then it broke outside of that resistance. So right here is the tail. Let me expand this a little bit. You're gonna see this big bullish move to the upside. What did price do? It came back down right on that resistance area, creating a new support. And then boom, a big bullish rally to the upside, all right? So this is a smart money move, okay? Because we see a big bullish move, and then this is accumulation. So before the markets can make another huge move, it needs to accumulate, orders, right? So big money institutional players are getting ready to set up a big play, and before they do that, they're gonna take people out, right? Which is the last. This is the spring. And then after that spring, you should see a huge rally. So once people get stopped out, you're gonna see a huge rally because the market makers are making those buys. And then the next move is gonna be the break and retest. So all you guys need to look for is a break and retest. So this right here, break, retest, continuation. But pay attention to more detail now, right? Now that you know that break and retest is essentially smart money concepts, pay attention to these patterns, right? After a big bearish move, there's consolidation, right? Consolidation just means some sort of accumulation or distribution, right? So if the US 30 is mainly in a bullish market, right, then you want to look for accumulation opportunities, and then pay attention to the last spring, right? The last spring will be a big, will eventually have a big bullish move to the upside, and then wait for price to break outside of it, retest, and this is where you want to get in for that opportunity right here. Oops, that was huge right there. Okay, so again, you know, whatever account size you have, always use proper risk management. I would recommend 1 to 2%. This index is highly volatile, so whatever you see on YouTube, whatever you see on Instagram, don't pay attention to it. You know, if you only have $1,000, risk 1 to 2%. If you have $10,000, risk 1 to 2%. If you have $100,000, risk 1 to 2%. It's the same thing. All right. So hopefully this helps. Rewind it, replay it, because you know, breaks and retests are very, very simple concepts. Okay. What you're looking for is a break outside of structure. Once it retests on that supply and demand area, you want to get in for a opportunity. Okay, so you can do this over and over and over again. I'll show you one more time. Okay. Sorry guys. So we have a break, a retest, and then a continuation. That is the most simplest way to actually understand the markets. But once you start understanding that these things move in waves and there's accumulation before a big move, then you can actually start identifying bigger plays. All right, so right here, this is a redistribution. I mean, this is a reaccumulation. A reaccumulation is a mini version of accumulation in the markets. Okay, so we can kind of get into that in part 2. This is part 1 because I want to keep it simple. Breaks and retests are essentially this, right? You see essentially price doing stuff like this. Okay, and what you want to do is find your support and resistance area. So if this is support right here, okay, then this area is the opportunity to get in for a buy. Okay, so price went up, it tested, came down, broke outside of that resistance, retested right here, and then you get in for a buy. So this is how you want to trade US 30, because it's overall a bullish market, right? Statistically speaking, right? If you want to be a high probability trader, the market is overall bullish when it comes to the stock market, right? 10% year over year. So if you know that and you know probabilities, then you want to look for breaks and retests within an accumulation phase, right? So accumulation after the consolidation, and then go in for an opportunity after the break and retest. That's all I got, guys. If you see value in this, if you have more questions, go ahead and join my free Slack group, because I can do, you know, breakdowns on live Zooms for you. I'm not going to try to upsell you or anything, but you know, this is kind of what I do to actually take advantage of US 30. Hopefully it all makes sense to you. If you need more of a breakdown, just message me in the Slack group and I'll get back to you as soon as possible. Thanks so much.